Hey everyone, welcome back to Crypto Yield Pro. This is your home for real crypto and DeFi analysis. Today I have got something really special lined up. I am going to walk you through my perfect crypto chart setup, featuring a combination of powerful TradingView indicators and settings that can help you spot trends, momentum shifts, and potential price targets more clearly. We'll be using the Ethereum USD chart as our example goes, and by the end of this video, you will know exactly how to replicate this setup in your own trades. So buckle up and stay with me until the end because I am about to share some game-changing tips around here. So let's set up my chart. I am on my TradingView account, and first things first, I always switch to logarithmic chart when looking at bigger moves over time. So when you scroll your mouse around the price area here in this column, you will see the letter L here. Mine is already ticked, but you will see that if I unclick, this is gonna be the chart without logarithm, and clicking on the logarithm chart, this is the new chart. So a log chart lets me see percentage based changes rather than just dollar differences. It makes a world of difference, especially for cryptos like Ethereum, Bitcoin that have seen massive price swings. The A is already ticked here, that is the auto fits, and this setup, it doesn't change the chart, but it gives you a better understanding of the chart and zoom in and zoom out, always targeting the actual price right now. And if I untick, you will see if I scroll, it's gonna go to another place that is not the current price. So I like to keep it as well so I can roll my mouse and it keeps always showing me the current price. The log chart is a good idea because, for example, a move from $100 to $200 is a 100% jump, right? Which is huge compared to a move from $4,000 to $4,100. A log chart helps keep things in perspective. Now let me introduce you my favorite indicators. I like to keep my setup simple but effective. So if you are on the free plan of TradingView, you can only have two indicators at once. So you have to choose wisely. I have the essential plan, that is the cheapest one, which gives me 5 indicators per chart. I pay the annually plan and it's around $12 per month. So here's my favorite lineup. First, you click on indicators, and I already have here my favorite ones, but I will start with the Heikin Ashi RSI oscillator. This is an independent indicator from J. Rogers. If you click here, read more, you can go deeper into this indicator, but basically what the Heikin Ashi RSI isolator does, it combines the smoothness of Heikin Ashi candles with the power of RSI. It reduces noise, so you get a cleaner signal for overbought and oversold zones. So if you don't know what Heikin Ashi candles are, they are a special way of plotting price bars that smooth out the market's ups and downs, making it easier to spot overall trends. You can change it to Heikin Ashi candles if you click it here in the candles options, and you will go to Heikin Ashi, that I have it here on my favorites. And you'll see that it reduces the noise drastically. You can quickly see if the market is going up or down without getting confused by small choppy moves. I like to use them when you want a clearer view of the trend, especially if you are a swing or position trader looking to stay in trades for longer and avoid being shaken out by minor fluctuations. So my second indicator on my favorite setup is the SuperTrend indicator that you will also find here in the indicator tab. Just search it here for SuperTrend and you'll get this one. And you will see that these red and green lines were added here on the chart. The SuperTrend is a trailing indicator that shows whether we are in an uptrend, the green, or in a downtrend, the red line. And it also helps indicate where you might place your stop loss. You can see here that with Heikin Ashi candles, we have less noise than the normal bar candles. See that we have so much noise in the daily chart here. And if we switch to Heikin Ashi candles, we have much clearer trends here. Keep going. The third indicator that I'm going to add is this one, moving average 10, 55, 100 MAs plus 200 SMA close. This is also an independent indicator from Jara Washman, but I found it really interesting as it combines the main EMAs, in my opinion, and the 200 simple moving average. In the title, it doesn't include the 21 EMA, that is really important as well. So the EMAs and MA indicator that I recently included simply put several moving indicator averages on your chart all at once, so you can easily see short-term, medium-term, and long-term trends with the current breakdown. So the EMA 10 and the EMA 21, that is the soft blue and the hard blue, these are fast moving averages. They react quickly to price. So it's good for quick changes to short-term momentum as they get the price average from the last 10 and 21 closes of these candles. The difference from EMA to only MA is that the EMA exponential moving average takes in consideration a high power, let's say, from the last candle's close. And the MA only moving average or SMA simple moving average takes an average of all candles closing in that specific time. In this example, 10 refers to last 10 bar closes and 21 to the last 21 bar closes. Moving on to the EMA 55 and 100, the 55 is the purple one and the 100 is the yellow one. These are slower moving averages, so they smooth out more noise and help confirm medium-term trends. And in the green color, we see the SMA 200. This is a very slow moving average, not an exponential moving average, and is often used as a big picture trend filter. If the price is above it, many traders consider the market in a long-term uptrend. And if it's below, they see a downtrend. These indicators are very powerful on the daily chart, as you can see right now. But for long-term traders, they normally use all these indicators even on the weekly chart. In the weekly chart, we can see here that the SuperTrend has a clearer path here, and Ethereum just bounced off the SuperTrend green line in September and August of 2024. So it worked perfectly as if it was your stop loss in a trade. As had it worked as well on May 22nd when Ethereum dumped hard and you could sell it here instead of selling, let's say, in $1,000 mark. However, if I see an extended, this is my opinion, this is the way that I trade, if I see a long-term extension like that, I would look into smaller periods like the 3-day, let's say, and in that time I would be out of the market partially here in this area in $2,300 and also in this area here in $3,400 area. You can also consider the EMA 100, as you see here that it respected very well. You could easily get out of the market here when it dumped below the EMA 100 and see how Ethereum would behave in this area in the SMA 200 area. We can see here that it bounced close to the 200 SMA, but it rejected here on the SuperTrend indicator on the red zone. So I could wait here in the 3-day chart if Ethereum would break the SuperTrend red line here, and then I could re-enter my trade. But as it stopped on this resistance zone, I protected my trade since in that time Ethereum dumped to the $800 area. Going back to the daily chart, clicking twice here and twice here, it's gonna transport me to the current price and current situation. Now that I have my main setup here, as an example in Ethereum US dollar daily chart, let's zoom in and show you how each indicator works. The HARSI indicator, that is the Heikin Ashi RSI oscillator indicator, if I expand here, you will have to think of it like a normal RSI but displayed as a mini Heikin Ashi candle. It's smoother than a typical RSI line, so it helps you avoid reacting to every little market wiggle. You tend to sell in overbought areas and you tend to buy on oversold areas. I really like to use this indicator in the weekly chart because if I unclick here the extension, you will see that when the Heikin Ashi RSI is on oversold areas were perfectly buy zones for Ethereum. This is a very good area to always buy. When it enters this green area here, wait when it's on the super trend indicator on the red zone. You wait to have this area and you buy when it's on the super trend, red zone, oversold area on HARSI, below 200 SMA. Guys, this is the perfect entry on Ethereum. And you can use it for other tokens as well. Then the super trend. These plots align below or above price, right? Flipping color when the trends might be reversing. It's great for quickly confirming, are we bullish or bearish right now? So in Ethereum weekly chart, we are currently in a very bullish trend. And the moving average that I told you before, the 10 and 21 EMAs react faster to price changes, so good for short-term signals. The 55 and 100 EMAs give you a mid-term perspective, and the 200 SMA, the green one, is the gold standard for long-term trend. If price is above the 200 SMA, many traders see the market as bullish overall. And now we can't forget the Fibonacci Extension tool, that is the future targets for any token. First, you click it here and you will see the Fib retracement tool. And you will pick your swing low and swing high. So in Ethereum USD weekly chart, I would take from the last top in the last bull market, $4,900 to the bottom in $870 approximately, and I would run my mouse until the end of 2025. Then this indicator will map out levels beyond my last high or beyond Ethereum's last high. So these levels 1618, 2618, 3618, and 4236 are potential future resistance for profit-taking spots. It's like a roadmap for where price might head next if momentum keeps rolling. If we take the example of the last cycle, you will see that Ethereum topped on 2018 January around $1,400 and it bottomed in $80. The 3618 level was pretty much around $5,000. And did you see where Ethereum got? So if history repeats, we are going this cycle with Ethereum to $15,000. If we get diminishing returns, $11,000, And if the ETF effect goes hard on the price, we probably see Ethereum, in my opinion, easily targeting $20,000. So with this perfect setup, in my opinion, you will have a big picture sense of price moves and price action for any token, any stock that you want to trade, any commodities. Feel free to choose your tokens and pay attention always in the profit taking area. Now, if you want to set up your charts exactly like this, consider grabbing a TradingView plan. I have got a referral link in the first pinned comment below. If you use that link, you can get a $15 discount on whichever paid plan you choose, if you decide to go beyond the free versions, of course. So this helps you to support the channel and let me keep creating more in-depth tutorials for you like this one. Also, if you are curious about diving deeper into DeFi and learning how to earn crypto outside of just holding it, my DeFi ebook is also linked in the pinned comment below. That's another great way to support my channel and you get valuable information too. So it's a win-win situation. So that's the perfect crypto trading setup on TradingView in my opinion. Use log scale, don't forget it, for a better sense of big moves. Heikin Ashi RSI indicator to smooth out RSI signals. SuperTrend for easy trend visuals. Key moving average for short to long-term perspective, and Fibonacci extensions to gauge possible price targets in the future. Please remember that none of these are crystal balls. Always do your own research and manage your risk. This is a combination that really helped me stay on top of the markets without cluttering up my screen. Probably you found value in this video, so tap this like button, hit subscribe, and drop a comment below about your favorite indicator combo. Don't forget to check the pinned comment for my TradingView referral and DeFi ebook below. Keep stacking that knowledge, and I will see you tomorrow in the next video.